Hello everyone, welcome to the Ichimoku daily analysis for gold for Tuesday, March the 9th, 2010. Well, a continuation of the downtrend in the first time frame with a candle with a lower high and a lower low. So there hasn't been any change of trend at the moment. But we have a candle now with a very small red body, and the small body tells us that the sellers made only a very small amount of net progress on the day between the open and the close. That may be significant for the continuation of the trend in the first time frame. It may point to a potential termination of the trend in the first time frame. This is very similar to a hammer type pattern, and we have a previous downtrend in place, and we have a candle with a very small body and a relatively long shadow on the bottom, and it resembles a hammer, and it's said to be hammering out a bottom. So there is potential for a change of trend to the upside here. Change of trend would be a bar or a candle with a higher high and a higher low, so we do need confirmation of any change of trend. Now, interestingly, we had a confluence of support around this area where the market traded down to. And we can see that the market attempted to trade down through the Tenkan-sen at 11.17 and the bottom of the cloud around the 11.12 region. And there was upside price rejection as the market attempted to trade down through there. The market failed to close down below the bottom of the cloud. So those areas are offering a decent amount of support to this market. And we can see from where the market is opened and closed that the market opened towards the high and closed towards the high, which is telling us that the sellers failed to continue the control of the market that they had previously, and they certainly weren't keen because they closed the market only just below the previous close, but they also failed to show any commitment to taking this market lower. If they had shown commitment, they would have potentially closed the market down here around the low and certainly outside of the bottom of the cloud. So they failed to show commitment. So that reading of the short-term dynamics of the market raises doubt about the continuation of the trend in the first time frame. So the high of the current candle becomes very important for this market for a potential change of trend to the upside. Now, the market is trading within the cloud or the Kumo, so that tells us that we have a neutral market overall, neither bullish nor bearish, so neutral. So you need to take that into consideration when we're potentially looking at trades in this market. The market is, however, trading up above the Tenkan-sen and Kijun-sen, which means that the market is bullish in the medium and faster term timeframes. But both of these indicators are pointing sideways, and that's telling us that the market is trying to find equilibrium. Equilibrium in the fast time frame is at the Tenkan-sen here, and the market attempted to trade down through there and has just closed up above there. So potentially this is telling us that the market is finding equilibrium in that fast time frame. The Kijun-sen turning flat also represents the equilibrium in the medium-term time frame, and we can see that the market is retracing back towards that level, and quite often that happens when the Kijun-sen turns flat. So we've got this pullback towards the Kijun-sen, and the market is attempting to find equilibrium, represented by the Kijun-sen, in a medium-term picture. So there is still a chance that the market may continue to retrace back towards this Kijun-sen. So we do need to keep an eye on the low of the current candle for that to potentially happen. Considering what we've just said previously, though, with the strong support that the market found around this area and the upside price rejection, it's more likely that there may be a change of trend to the upside, but confirmation is important. Now, if the market continues to trade down and the Kijun-sen will offer potential support, that's around the 1095 level. If that area is taken out, then the zone between 1080 down to 1066 represents a very strong zone of support. And certainly the market has previously traded down to around the 1044 region. We can see there was strong buying coming in as it traded down to around there. So if the market does continue to trade down, then there is good support down around there. To the upside, though, we do have the market offering potential resistance anywhere within the cloud. So anywhere from here, if the market trades up above the high around 1124, 1125, then there is potential resistance up to around the 1150 region where the top of the cloud is. We have a swing high around the 1146, 1145 region as well, so there is potential for resistance up around there too. If the market breaks out of the cloud, then there is potential resistance around this previous swing high around the 1162 region and up to around the 1170 area. So we have a market that's basically neutral. The market, however, is in a second time frame uptrend, but neutral in terms of Ichimoku. In the short term and medium term, the market is bullish, but attempting to find equilibrium. And we have a well-defined series of support levels down below and some fairly strong resistance up above.